Mike Wilson, if you go out to Morgan Stanley revenue producers in your Ann Arbor, Michigan, go blue, or you go over to Chicago and Northwestern where you studied and you talk to revenue producers there, you've got to discern between single bond prices and spreads. Why does spread study matter now?
So look, I mean, what Mr. Kaplan's talking about is financial conditions, right? So we've been in a world where financial conditions have been too loose, quite frankly. The biggest surprise last year to markets, I believe, was the dollar weakening, and that offset any tightening that the Fed was doing. That's why financial conditions loosened so much last year. Now, I bet you if they had known that we were going to get a 21% corporate tax rate last year, they may have taken a different path. They may have tightened a little bit more against that. They didn't. And remember, monetary policy works with a lag. So I appreciate Mr. Kaplan's comment that they're not seeing it yet, but you never see it until it actually smacks you in the face, right? That's the problem.
Have you changed Morgan Stanley equity allocation or equity strategy in the last 4 or 5 days, given the turmoil?
We have, but we've been changing our strategy for the last couple of months.
What did you do in the last 4 or 5 days?
So what we did is we sold our technology overweight and we actually bought utilities. So that sounds a little perverse.
You're going to a yield thing because
That's
you're buying on. Come on, let me translate this for all you CFAs. Morgan Stanley's buying the yield on the dip. That's what you're doing with utilities.
Pretty much. We're saying, look, the one sector that has priced in reflation and sort of rates getting out of control is utilities and the bond proxies. They've underperformed dramatically, Tom, as you know. And technology stocks have really outperformed through this period, which makes sense. But if you really think rates are blowing through 3% on a 10-year, at some point that's going to have a gating factor on the high multiple areas. And really within technology, our downgrade was predicated on semiconductors more than it was on, say, the big cap growth stocks.